Huge changes are happening in the housing market. Now, one may wonder, what would shake up the housing market? Well, in the news lately, we have one of the largest mortgage originators buying up one of the biggest real estate brokerages, and now the new announcement, they're actually buying up the largest home mortgage servicer. I'm talking about Rocket Companies. Now, Rocket owns one of the largest mortgage origination businesses in America, and they are ready to disrupt the housing market. Now, this is something that I believe that everyone in the housing market, if you're working in the housing market, you should be paying attention to. I'm talking about realtors, loan officers, title companies, maybe even the National Association of Realtors should be taking note of this. And we know many of you, the general public, you believe that the way that real estate transactions happen today, buying and selling homes, is sort of like archaic, back to horse and buggy almost, and maybe even going back to times before the wheel. I remember when the technology was starting to take over in this business, a lot of the agents who average an age probably in the mid-50s, and many older than that, real estate agents, they were rebelling against things like text messaging. I can remember being in a meeting one time, and one of the agents said, I don't care how young they are or how they like to communicate. I am a telephone person, and I don't text. And I remember thinking to myself, boy, you were really behind the times. But, with the internet providing, and I know that's relatively new over the last 20, 25 years as consumers using the internet, but now we have instant information. You can find out anything you want to know, be educated on just about anything on platforms like YouTube. And, so one may think, do we really need a traditional real estate agent, as many of you believe, just opening up doors and telling people that the room with the appliances and the sink is the kitchen? Many are wondering, is there a better, more efficient way to transact when buying or selling a home? Even more people are wondering if the whole process can't be done not only more efficiently, but for less money. With housing affordability where it is right now, it may take a long time for, it to seem like affordability is returning in the housing market with people. They're paying over, in some cases, more than 50% of their salary is going to housing costs. Let's face it, most of your first-time home buyers are still sidelined. And, everybody is looking at, how can I get a piece of this transaction? And, then you have, technology, right? So why does it seem like in other industries, whether it was the travel agent business or whether it was the stock investing business, with the digital platforms that are out there, really just about anything, technology has been the disruptor. The only thing we really haven't seen it disrupt so far is the home buying and selling process. It certainly made it different, but as far as the fees and the transactions themselves, nothing really seems to be changing with the technology. But now it may be different, because when technology gets involved, more efficiency and streamlined systems seem to happen, and as a result, it typically costs consumers less money. But beware, when tech companies create systems, it could cost jobs. Well, let's dive into what appears to be a tech company who happens to be a mortgage company trying to build a narrow vertical platform to make the home buying and selling business more efficient by having the entire process under one roof. And I remember when this platform, Rocket, came to be, and literally they could qualify people in what appeared to be seconds. You went in, you answered a couple things, you put some information in, and boom, it qualified you pretty quickly to, or approved you for a home loan. And I remember hearing Dan Gilbert, the founder of Rocket, say, people didn't trust it because it was so fast. The technology was so good, it was so advanced that people actually didn't trust it. So they went in and had to manually slow it down. So the same platform that had the ability to do it literally in seconds maybe took a couple minutes to do. That became more believable. Now, before we start looking at these acquisition deals, let me first talk about Rocket Companies, who is the owner of Rocket Mortgage, and just kind of we'll lay down some foundation with them first so you have a better understanding of the elephant in the room. So let's take a look at rocketmortgage.com, their website. And at a glance here, it would seem like, well, this is just any other kind of lead generation, mortgage company offering lots of information. They show a lot of tech here, easy to navigate. But as soon as you go to their homepage, it says buy or sell a home and you could save thousands. Now, this is important to a lot of people because they want to save thousands when they're buying and selling a home. So it says that save when you finance through Rocket Mortgage, save even more when you sell your home using a Rocket Homes partner agent. And then here they have these buttons that you can click on. It says, hey, I'm a buyer. These will take you down these different rabbit holes where they can gather information and provide you information. But I'm buying, save up to $10,000. Well, sounds great, right? I'm selling. Well, you can get 0.5% back if you follow this. And if you're buying and selling, well, then you get the combination of the two. You get the 10K in up to 10K in savings, and you get the 0.5% back. So you would think of this and you would say, well, it looks like it covers a lot. They have home equity loans, look at their home loans, rate updates. This site is just chock full of great information. I've referenced them a lot in my podcast. And you would think, well, that's plenty good for Rocket Mortgage. And then one may say, but you don't know Dan Gilbert, who's the founder of Rocket, because now these big news announcements, they're buying these other companies. And just to give you the foundation, like I said, that they're one of the largest mortgage originators in the country. So here on Fool.com, the Motley Fool Money website, in this chart, it says the top 25 largest mortgage lenders by originations. United Wholesale Mortgage surpassed back in 2023 Rocket. They were number one. Rocket had surpassed Wells Fargo back in the day. But look at these numbers here. I mean, you can see total originations. I mean, massive, right? Bank of America's number 3. You could see the difference in the amount of originations that this company does, Rocket Mortgage. So let's get back to the announcement about Rocket buying Redfin. Have you ever heard of them before? Does everybody know who Redfin is? If not, let's just take a quick minute and bring you up to date. So we're on Wikipedia here, the history of Redfin. Redfin was founded in 2004 by 3 partners. And one of the partners helped to build Redfin's mapping and real estate data analytics engine, which launched in 2007. But in January of 2006, Redfin named Glenn Kelman as the CEO. He's kind of like the spokesperson now. And back in 2007, like I said, the company began to show this available amount of homes, like what's for sale, in this really cool interactive map on their website. And a lot of people, even if they're using other agents, have used Redfin. The news has used them. We've used them also on our podcast as well in charting their information. I think it was the claim of, the recent claim that came out that only 71% of realtors did a transaction in 2024. That was said to be a Redfin report. Now, I think NAR came out and said that wasn't accurate. But anyway, you get what I'm getting at here. They're a data company. They're a tech company. They're a real estate brokerage. It's Redfin. In June of 2017, the company began Redfin Now, which is a home flipping division. And on July 28th of 2017, Redfin became a public company, which is amazing that it was only that short time ago, 2017. It was the year I founded Sachs Realty. And in 2019, Redfin began allowing buyers to submit offers on homes listed by Redfin selling agents without using a buyer's agent. Okay. A month later, the company partnered with Opendoor, where visitors could go to Redfin website. They could request an offer to buy their houses from Opendoor. And, I think Opendoor even allowed people to go and see their houses. They put these funky lock boxes on the door and people could just go. I'm pretty sure it was open door without even having an agent. And in June of 2022, the company Redfin, still talking about them, announced layoffs of 8% of its staff. So this was I had a couple friends at Redfin, and one of them, I've known for quite some time. He wasn't cut. He actually is a big producer here in Maryland for them. But their whole platform was salaried agents. And then in November 22nd, the company announced additional layoffs of 862 people, or 13% of its staff, and the wind down of its Redfin Now home flipping unit. And then on March 10th, what we're talking about right now, Rocket Mortgage announced its acquisition of Redfin in a $1.75 billion deal. Now let's just take a look at some of Redfin's acquisitions, because they've been huge over the years. In October 2014, they acquired what's known as Walk Score. I think everybody that has been home shopping understands what that is. With apartment shopping and buying a home, this Walk Score kind of tells you where this place is located, what's its proximity to walk to things like restaurants and stores and shops and jobs and things like that. And then also in April of 21, they acquired RentPath, which owns the Apartment Guide. I mean, this is big, and Rent.com. And recently, Zillow just made a deal with Redfin about, aggregating all of their rental stuff because of this RentPath acquisition, I'm sure. And in January of 2022, they acquired Bay Equity Home Loans and became a mortgage lender here. So if you haven't heard of Redfin prior to now, well, now you have. So the question is, and I'm curious as we go through here, is Rocket Companies buying Redfin a good thing or a bad thing? And, because this comes in where we're going to see a lot of disruption in the housing market. So if they're planning on keeping the same model that Redfin has now, and with having agents, dealing directly with buyers and sellers, or buyers and sellers needing agents, if there's disruption in this process, to where maybe other tech companies come along and say, we don't need agents, will Rocket, who's a very smart company, very smart leadership, very capable to disrupt industries. They did it in the mortgage industry. Will they look back and say it was a big mistake buying Redfin? Or will we look back and say they were the driver of change, that Rocket was the driver of change that disrupts the housing market, the way things are done from this point forward? So with all this going on, guys, let me just pause for a minute. And before we go any further, I want to just take a minute and let you know, if you're in the market to buy a home in the near future, you're either in the process right now or like to buy a home this year, I want you to be prepared and I want you to avoid common mistakes. And so I just want to mention that I am hosting my very first ever Smart Home Buyer Seminar. It's Saturday, April 12th from 11 a.m. to 2 p.m. Eastern Time. It will be live. It will be on Zoom. I'm dropping the link I'm pinning it in the comments section, as well as the show notes. This first of its kind online seminar is limited to only 30 spots because it's live and because I want to get to know everybody that is participating in the seminar. It's going to be done by Zoom. You can have your camera on if you'd like, but I want to make sure that everybody, the reason it's only 30 spots, I want to make sure that everybody gets what they need. If they're in the market buying a home right now, and they come away with everything that they need and that their questions are answered. This seminar will provide you with tons of value. So if you're wanting to buy a home soon, please check it out. So let's take a look at Detroit Free Press and see what they say about all of this Detroit news. What the pending Rocket Redfin deal means for the mortgage industry and consumers. With its $1.75 billion deal to buy Redfin, the popular online real estate listings platform and brokerage, Detroit-based Rocket Companies is poised to become an even bigger one-stop shop for homebuyers. But whether the pending Rocket-Redfin combination would be good for homebuyers is an open question. Even as executives at Dan Gilbert's Rocket Companies insist that the streamlined end-to-end ecosystem they plan to create would in fact simplify home buying and save buyers money like $20,000 in fees off of the cost of a $430,000 home by their estimates. One prominent antitrust commentator has speculated that the real aim of the deal could be to create a kickback machine involving mortgage lending, title services, and home search platform. Presumably a scenario where Rocket would keep consumers within its real estate assembly line for every step of the process, charging fees along the way. This guy sounds like an idiot, this prominent antitrust commentator that's making this allegation, because why would Rocket create a kickback machine? Kickbacks are illegal. They're not going to do something that stupid. I'm not saying that I'm for this, but this is why, people, when they read stuff like this is the propaganda that is attached to it. So of course, Rocket is pushed back, calling the commentator's notion uninformed and reckless. I agree. And says its planned combination with Redfin will actually make home buying easier, more accessible, more affordable. Guys, look, I'm not trying to put myself out of business here, but look, I'm not stupid. I see, and podcasting with you all, I see your frustrations and dealing with the transactions, buyers and sellers. I hear it, I see the agents' frustrations. Something's coming. Something is definitely going to disrupt this business. And if you're not paying attention to this, your business is going to be lost in the dust. You'll be out. If you're an agent or you're a broker, your business will be over if you're not at least acknowledging, like where your business will fit into some of these changes that appear to be barreling down the track. So, and to kind of show what this integrated end-to-end ecosystem would look like, as they call it, let's take a look at this diagram. What that shows, you have loan servicing, title and closing, home financing, real estate brokerage, rentals, home search. I mean, it looks like an ecosystem to me, right? One of the complaints that I hear a lot of loan officers saying is that, with Rocket is if the buyers don't fit in that perfect box, there's some, creative work that needs to be done for the home buyer, that Rocket isn't the place to go. I've heard a lot of mortgage brokers and loan officers say that. It may just be them supporting what they do, and they could be wrong. I don't know. I don't have enough experience with it. I'm not a loan originator. And as we look further down in this Detroit Free Press article, it says why Rocket wants this deal. Rocket hopes to finalize the all-stock deal for Redfin by the third quarter of 2025. Rocket and Redfin executives have laid out reasons why they believe their combination would be good. The deal would streamline a mix of different services in the home buying journey, from search to mortgage lending to title and closing, putting them under one corporate umbrella. And by the way, putting a hell of a lot of businesses under, right? This deal potentially, if they're successful and home buyers and sellers love this, we're going to see a big consolidation. It may not be directly putting businesses out of business or, people out of jobs. Some may say they put themselves out of business and out of jobs, but this is a big change. I could see where now we've got Zillow and Homes.com that CoStar just bought. There's a lot going on here where I can see a massive consolidation in this industry. It says here, Rocket would gain more potential customers from the 50 million monthly visitors to Redfin's website. That's huge. That is a lot of traffic. There would be more personalized information on customers through combining the firm's data so they'll know you inside and out. There would be $200 million a year in synergies, specifically $140 million in lower expenses from things such as cutting duplicative operations, and $60 million in additional revenue from things such as adding Rocket's mortgage and title services to Redfin's brokerage transactions. If that's not looking like a major tech disruption to an already battered real estate industry where people working in the industry are trying to pay their bills on a 40 to 50 year low in home sale transactions. Now, on top of that, let's look at this latest bombshell from Rocket Companies. So this APnews.com reports that mortgage company Rocket is buying competitor Mr. Cooper in an all-stock deal valued at $9.4 billion. Rocket Companies said Monday that bringing Mr. Cooper Group into the fold will create a business representing 1 in every 6 mortgages in the United States and give it almost 7 million additional clients. The deal would boost loan volumes, the company said, while lowering client acquisition costs. By combining Mr. Cooper and Rocket, we will form the strongest mortgage company in the industry, offering an end-to-end home ownership experience backed by leading technology and grounded in customer care. The U.S. housing market has been slumping for years, buffeted by soaring mortgage rates and sky-high prices that have put homes out of the reach for many Americans. Well, there you have it. So I want to just say for a moment that a lot of the questions that I've been getting lately revolve around the NAR compensation rules, the new rules that require buyers nationwide to sign buyer agency agreements with agents to have them represent them in a transaction, and the transparency that is being forced now that wasn't as transparent for buyers, that buyer agents weren't free, and having an agent, a buyer's agent, there are fees that are involved. And so now with all of this in the news over the last couple of years with the lawsuits, NAR lawsuits, the big question that I get a lot is, Todd, home prices have doubled since, call it 2019, in a lot of markets. They've gone up a lot, whether it's 40% increases, 50, 100% increases. Homes are more expensive. So a lot of the conversations that I have with consumers lately boils around that the house has doubled, but the fees seem like they've doubled too. And I can't speak to other brokers, what they charge, but I get these questions from consumers a lot. They say, the agent's job hasn't changed that much, has it? Has their workload doubled? Have their expenses doubled? It's a hard thing to look at some point. If you're a real estate agent and you're out there and you're justifying your time and justifying your worth, you got to look at that question and not be afraid to address it. Or, just say that the consumers don't have a clue. What we're talking about in these videos and trying to bring awareness to the industry, educate consumers, buyers, and sellers, we're also trying to educate agents and brokers to say things like this are happening. What we're going over right now, these tech companies are looking to take your job. So it really is important when we're building businesses that we look at what are the needs of the consumers, what are the concerns of the consumers, and we really have to take a deep dive and say, do we need to change our business? Do we need to change our business model in order to be prepared from what these companies that make a lot of money and employ a lot of people and have a lot of power and a lot of reach and what they may do to this industry? So I hope you found this video somewhat interesting, if nothing else. As always, I love your comments and questions. Keep them coming. If you haven't subscribed to our channel, please consider doing so now and check out my homebuyer seminar. That is the first of its kind, April 12th, only 30 spots. I'm sure we'll be doing more of these, but don't wait. Sign up if you're in the market. I think you'll find it's very valuable and worth your time. And one of the biggest compliments you can do for us as we are building the most amazing online community, real estate community on the internet, is share this video on our channel with your family and friends. And don't forget, we're on every major social media and audio platform as well, so you can follow us there. So see you next time.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.